Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Holding steady, the BOJ keeps its policy settings unchanged and nudges its economic growth forecast higher. Officials stop short of confirming an intervention that drove the yen sharply higher. President Trump claims a breakthrough in Gaza, saying the U.S.-led Board of Peace has reached an agreement for Hamas to disarm, though questions still linger. And Apple shares slide in aftermarket trading as component shortages weigh on the company's sales forecast. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. A lot to get through in this show. Happy Friday. Before we get into the geopolitics of the region and the yen, a big story after that BOJ decision just about an hour ago. Let's take a quick look at where markets are sitting. U.S. futures 0.3% higher. Now that follows a positive close for the S&P 500, about 1.7% higher, led by gains after earnings. We saw Apple and we also saw Amazon. Now Apple dropped about 6% in after-hour trading, and this is because of the supply shortages. Amazon, though, was a contrast to that performance, about 9% gain, and that is on cloud computing revenue that was higher for a fifth straight quarter. We also saw gains in the SOX index, the biggest in a while, and that is as the AI story returns front and focus. And speaking of that, Asian equities 3.6% higher this morning, led by, no surprise, the Kospi, which earlier in the session had its best intraday performance, 15% higher, led by gains in its two biggest constituents, Samsung and SK Hynix. In Asia, we're also keeping an eye on the yen. It's roaming around the 160 level against the US dollar. We'll talk more in depth about that. And then Brent crude prices, $88 on the barrel, 1% lower. Escalations in the Middle East continue, albeit a little bit calmer than over the past couple of days. But we have another geopolitical story out of Gaza. We'll talk a little bit more about that in just a few minutes. And then the yield on the 10-year notes, 4.65% lower, 2 basis points lower today. We're keeping an eye on the long-term yields, though, that are touching fresh multi-year highs. But we had solid U.S. consumer spending data, and we're keeping an eye out on that, and continuously the hawkish tilt by the Federal Reserve. Now, for a look or a deeper dive into what is happening in Asian markets this morning, we've got Avril Hong in our Singapore studio for us. Avril, what do you have for us?
Well, it's that powerful tech rebound underway in Asia today, Abir. I mean, you're looking at the Kospi. At one point, its climb was the most on record, and it's underpinned by 20% rally in the chip giants. And investors may be betting that we're done with the unwind in momentum. Momentum is soaring today. It's coming back in a big way. And this is also supported by some domestic developments, with the Sovereign Wealth Fund planning investments strategically into AI, which would, for the first time, include domestic assets. So that's what you're seeing in stocks. And that's also spreading to Japan, where the tech rebound is also underway. But to your point on the BOJ, we of course saw it leaving the overnight call rate unchanged at 1%. And to some, this was a missed opportunity to follow through on the yen gains overnight, where we did see dollar yen dipping below the 160 handle, in the form of perhaps some expectations in market participants that there would be a surprise rate hike. So in the absence of that, the focus, the onus now is really shifting to Ueda-san to follow through with some hawkish messaging to support the Japanese currency.
All right, and we'll be keeping a close eye on that, of course. Avril Hong in our Singapore studio. Now, sticking with that story, the Bank of Japan kept its policy settings unchanged and nudged its economic growth forecast higher, signaling confidence that the economy remains on track for further policy normalization. Bloomberg's Sherry-Ann is in Tokyo and joins us now. Sherry-Ann, good to have you on, a timely time to have you on this morning. The BOJ kept rates unchanged. Now, that was widely expected. Averill was just speaking about how that was a missed opportunity, perhaps. Can you talk to us a little bit more about what exactly did the decision entail and some of the details there?
Amir, I'm not surprised that it could be taken that way, right? Because there was a lot of excitement going into this BOJ meeting, just because we had that suspected intervention overnight. Coming into this meeting, all 52 economists surveyed by Bloomberg expected no change, especially since they hiked in June, and we have now the rate at the highest level since 1995 at 1%. But then overnight, we actually saw sources confirming that Japanese officials had actually officially intervened in order to support the currency. We also heard that U.S. authorities had carried out rate checks. So then we came into this morning thinking, well, we thought it was going to be a routine meeting, but could it mean that potentially the BOJ is ready to act? In fact, T.S. Lombard had said that before, when we have seen these interventions, the BOJ has hiked rates, and we have seen that just recently, mid-2024 as well. But the expectations were a little bit perhaps too high for a very cautious Bank of Japan, because it was as expected, left at 1%, and there was only one dissent that wanted to hike rates. That was also a key number that we're looking at. In June, we actually had a dissent for cutting rates. That was a reflectionist board member, Asada, who was appointed by the Takaichi government. This time around, the vote was 8-1. And the risks, though, when it came to the statement, all pointing to potentially more upside to inflation. So that is perhaps where you could take a little bit of more hawkish commentary away. They're saying that the risks are skewed to upside for inflation. The underlying inflation could be overshooting its 2% target. Also, they upgraded their forecast for fiscal year 2026 for growth to 0.6% from 0.5% previously, and they're attributing that to global AI demand, among other factors. So that's interesting, where they're seeing the strength and resilience of this economy.
Sherry-Ann, I'm just looking at the yen, and it's currently sitting at 160.6 against the dollar. A possible intervention that we reported yesterday. Further interventions, what is the consensus on that? Is it going to be meaningful to boost the currency more, or do you think we will need further rate hikes by the BOJ?
There are many things that are difficult to overcome for the Japanese yen at this point. We saw the intervention last night, suspected and confirmed by sources speaking to Bloomberg. So we saw that spike of 3.3%, which took us to the highest levels in over 2 years or so. But at the same time, or the best day for the yen against the dollar in about 2 years or so. But the fact is that rate differentials are still there, right? I mean, this was a good opportunity for Japanese authorities to try to do something, because we saw the FOMC holding rates steady, so the dollar was a little bit exposed. But then they had a three FOMC board members dissent towards the hawkish side. And right now, the perception is that the BOJ might be falling behind the curve. So you have the rate differentials that you have to contend with, not to mention credibility issues for Japanese authorities. How many times have we heard from finance ministry officials, from every official in the government, that they are carefully watching with a sense of urgency, that they're ready to take bold actions when it comes to the yen, and nothing necessarily has happened. We've been stuck at this 160 level for the longest time. And of course, we continue to see the weakness at a 40-year low against the U.S. dollar. And now $70 billion spent already earlier this year, which was record intervention. And the yen continues to weaken. And the fiscal concerns are not helping, because we continue to see that the government might be pulling the other direction from the Bank of Japan. We have just seen Prime Minister announce a sales tax cut on food and soft drinks temporarily for 2 years, but still that could mean some more expansionary moves.
All right. Bloomberg's Sherry-Ann with that excellent analysis, of course, our co-anchor of the Asia trade. Now, moving on to a regional story, President Trump says his U.S.-led Board of Peace has reached a deal to disarm Hamas and other armed groups in Gaza and establish a new Palestinian government. So to discuss this story, let's bring in Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. So what exactly do we know about this deal? And dare I ask, how possible is it to actually achieve this?
Yeah, so I mean, we don't know that much. We have the broad contours of it, but the information is coming out in patches. So broadly speaking, what the idea is that you will get some sort of semi-simultaneous withdrawal of Israeli troops from Gaza and a disarmament of Hamas, and then a new Palestinian government comes in. That's the idea. I think in practice, you know, those of us that have been looking at this story for some time are going to be cautious. Clearly, it's to be welcome that there appears to be any progress whatsoever, but you've got a couple of problems. One is the time frame is, I think, 200 to 350 days for implementation. That's a pretty wide margin for things to go wrong. Secondly, some of the comments coming out of Hamas overnight seem to suggest that they're anticipating an Israeli withdrawal before they disarm, which may be problematic. And thirdly, we've yet to hear from Israel. So once all of that comes out, then I think we'll have a better assessment of the chances of success.
Yeah, and just moving on to the same story we've been covering since early March at this point, but let's focus in on oil. We understand that Saudi Arabia is trying this new multinational alliance to protect the Red Sea. We're also seeing Brent crude prices at around $88 on the barrel, down today, but still a fifth up for this month on these new escalations. What do we know about this protection mechanism in the Red Sea?
Yeah, so I mean, it's interesting. I mean, there are existing maritime task forces out there that do similar things. For instance, we saw it off the Horn of Africa when you had the big issue with piracy, and there are others. So they can work. The issue here is which countries are going to be prepared to put forward resources, and do they have the resources that can be effective in this instance? Because ultimately what they're facing is missile and drone attacks, potentially from the Houthis. And not everyone necessarily has a navy capable of dealing with those threats. So it's absolutely to be welcomed. It's a great idea. It goes in the right direction. Can it be effective? Again, remains to be seen. Remains
to be seen on both fronts then, Stuart. Thank you as always for your time. Stuart Livingstone Wallace, our executive editor for the Middle East, North Africa and Russia. Now, still ahead, Dhabi Capital joins us with their market outlook as chip stocks rebound on the back of robust earnings from the likes of Amazon and Microsoft. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Asian stocks are rallying on the last trading day of the month. This is as investors renew bets on AI trading following this week's rout. For more on these market moves, Senior Portfolio Manager at Dhabi Capital, Rashmi Garg, is with us now. Rashmi, good to have you on. We were just talking about the positive performance that we're seeing, or the outperformance that we're really seeing in Asian equities, but also in the futures picture. So let me focus in on everything that's happening in this green across the screen that we're really seeing. Investors have focused in on CapEx for the past couple of quarters. Looking forward when it comes to the AI trade, to hyperscalers, what comes next? What do investors start looking at now?
Yes, good morning, Abir. And yes, it's a good day to be back on the screen. I mean, finally, we see some green. AI trade has been our preferred trade, the picks and shovels part of it. So it's good to see the shares bouncing back today. Now, going forward, what are they going to focus on? So what we saw in these past couple of earnings season was that CAPEX was being punished. If you are incurring higher CAPEX, then investors did not necessarily like it, because what they demanded was an answer to how this is going to be monetized. Now, what we saw, especially if we focus on the earnings of, let's say, Amazon and Microsoft, we saw that the higher CAPEX necessarily does not mean that it is impacting the profitability of these companies, or it is impacting the ability to monetize these expenses. I mean, we did see very strong growth, whether we look at Microsoft or whether we look at Amazon in the cloud divisions. Amazon also mentioned that the AI chips business is doing very well. The advertising business does well, which also gets helped by AI, the AI suggestions that the consumers get. So I think overall there is the ability to to monetize AI, and AI is a huge force. I mean, if you look at our lives today, compare it to 2 years ago, I'm sure all of us have been using some form of AI in our daily lives, in our work. So definitely this is a force to contend with, and we are strong believers.
Okay, so Rashmi, moving on from just AI and equities, central banks, a big week for central banks, starting with the Federal Reserve, BOE, and just this morning, the BOJ. And I want to focus in on the BOJ for a second. Another cautious step, it seems, towards policy normalization, especially after that yen intervention that was reported. But do you think that Japan can essentially keep on tightening without causing any meaningful disruption to the global bond market or that carry trade?
Yeah, so that's a very important question, Nabir. But, where are we right now in the global balance, global, let's say, fixed income scenario, or let's talk about the central bank scenario? We have Japan, the Japanese central bank, who have not tightened today, but whatever the signals the market is giving, a tightening is required. Whether we look at the inflation picture in Japan, whether we look at the Japanese yen, or if we even, look at the US picture for that matter. I mean, if you look at US, the communication from Chairman Walsh wasn't very clear, and clearly investors were saying, okay, you are saying that you're going to combat inflation, but you're not doing anything, and you are sort of giving us explanations which are not fully answering our questions. So I think the Bank of Japan has to continue tightening, but this is what is demanded by the economic backdrop. And I think the Fed will also need to tighten. And I think that in itself, in that sense, I mean, what is very important is the relationship between the BOJ and the Fed. And I think that will put both of them sort of in balance with each other. So I think this is what is needed. And if something less than that is done, then I think we will see huge imbalances in the global fixed income market.
So speaking of the Fed, Rashmi, you brought up Kevin Warsh's remarks essentially in the path forward. And we don't understand a lot about what the path forward looks like. He does say he wants to tame inflation still at a 5-year high. But going forward, what do you think will impact the Fed's decision making? What data point is going to have an impact on the decision making, whether it's a cut or a hike?
Yeah, so I think the data points that have always been important for the Fed when we talk about the Fed under Chairman Powell, the inflation, of course, the unemployment data, the economic growth, I think these have been the important data points. Now, under Powell, it was very clear that it is data dependency, which is guiding the path forward. But under Warsh, it seems that Warsh, in his desire to be different from Powell, is actually maybe sometimes not making that much sense, in the sense that he's not being able to give a very clear direction to the market. And he is touting that as strength, but I'm not sure if it is such a huge strength when the markets are actually, they feel that the credibility of the Fed is getting impacted as a result of that. If we look at the bond market, if we look at the 30-year yields. So I think, no, it is not like a Fed cannot say that, let the market do our job. I think the Fed needs to do their job. And I think going forward, the same data points are going to be important, but they need to be taken in totality by the chairman. And I think saying that we can change the measure of inflation is not going to satiate this market.
All right, Rashmi, we're going to have to leave it there. Rashmi Garg, Senior Portfolio Manager at Dhabi Capital. Now, coming up, Apple falls in late trade after some warnings in its latest earnings. We'll have the details on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Apple shares tumbled in late trade after a lower than expected sales forecast from the iPhone maker. Bloomberg tech anchor Ed Ludlow has more from San Francisco.
No sentimentality on Tim Cook's final Apple earnings call as CEO. The shares really fell in after hours as Apple explained that the September quarter, things are going to get more tough. not just because of higher memory prices, but tighter supply. They underestimated demand, which means that there is a shortage of leading edge processors. It is multifaceted. And that outlook, where they see revenue growth of 9% to 11% in the September quarter, below the Street's estimate of above 12%, it really overshadowed what was a strong June quarter. They beat expectations on the top line. iPhone came in strong with growth. Mac, a particular bright spot, although services missed estimates. Greater China missed estimates. It was a lot for the Street to pass. Tim Cook said that Apple underestimated demand and went on to say that they will therefore be scrambling on the supply side, quote, as shortages of those lead-edge processors and rising memory costs then go to iPhone, Mac, and particularly iPad in the quarter to come. Cook did use the opportunity to thank those participating in Apple's call, that he could not be more confident in his successor as CEO, John Ternus, but the market was focused on a tougher message. After years of Tim Cook mastering the supply chain is getting difficult for Apple, and Apple's entering a period where even it can't get all the chips that it wants. This is Ed Ludlow for Bloomberg News in San Francisco.
Meanwhile, Amazon jumped in late trade after reporting a fifth straight quarter of cloud revenue growth. The results ease investor concerns that the company will not produce a return on its AI spending. Amazon Web Services revenue jumped 37% to more than $42 billion, and the unit generates about a fifth of the company's revenue and most of its operating profit. And Anthropic says its AI models breached 3 organizations during recent cybersecurity tests. It comes a little more than a week after its chief rival OpenAI disclosed a similar incident. In a blog post, Anthropic says it found 3 instances in which its Claude AI tool accessed the internet and then hacked into external organizations. The affected organizations are not named in the post. Now, before we head to the break, just a quick look at where equity benchmarks are sitting. Green across the screen, U.S. futures 0.4 higher, NASDAQ 100 futures 1% higher after a positive close yesterday following 6 straight sessions of declines. We're also seeing Dow Jones and Euro Stoxx 50 futures in the green as well. And then we take a look at where Brent is sitting, as well as NY crude, and they're dropping 1.4% and 1.7% respectively. Escalations in the Middle East continue, albeit at a slower pace over on Friday. Now, coming up, we will cross live to Tokyo to speak to Amundi as the Bank of Japan kept rates unchanged. That is despite the yen intervention. That is coming up next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Holding steady, the BOJ keeps its policy settings unchanged and nudges its economic growth forecast higher. Officials stop short of a confirmation that an intervention that drove the yen sharply higher. President Trump claims a breakthrough in Gaza, saying the U.S.-led Board of Peace has reached an agreement for Hamas to disarm, though questions still linger. And Apple shares slide in aftermarket trading as component shortages weigh on the company's sales forecast. It has just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. We still have a lot to unpack for the remainder of the show. But before we get to that, a quick look at where equity gauges are sitting. U.S. futures tilting higher by the second, 0.4 at this point. A positive close in the S&P 500 yesterday. A positive close in NASDAQ 100 yesterday, over 3% higher following 6 straight sessions of declines. We also saw it entering a correction mode earlier in the week. Asian equities about 4% higher, led by the Kospi. We're seeing Samsung and SK Hynix at least 25% higher. The AI trade is alive and well. The return is palpable there, and that's why we're seeing Asian equities 3.9% higher as of this point. The Kospi 15% higher, its best intraday performance. Brent crude 1.4% lower. We're keeping an eye out on developments in the Middle East, albeit a little bit calmer today. We'll monitor the situation over the weekend and what developments happen there. And then the yield on the 10-year notes, 4.65%, dropping 2 or 3 basis points this morning. We're keeping an eye also on the longer-term yields that were touching fresh multi-year highs earlier. But for a look at what is happening in Asian markets, a very positive performance this morning. We've got Avril Hong in Singapore for us. Avril?
Yeah, Pierre, we're seeing tech rebounding hard today, tracking what we saw on Wall Street, where chips rallied by the most in more than a year, thanks to Microsoft, and then more recently, Amazon earnings also giving that positive sentiment. You're seeing the Kospi, as you said, rising by the most on record intraday, underpinned by 20+% gains in Samsung, SK Hynix, and it's also some domestic developments related to the sovereign wealth fund planning investments strategically into AI, which would for the first time include domestic assets that are also lifting tech stocks. It's not just what we're seeing in South Korea, of course. Japan tech stock rebound is well underway as well. And this is coming on a day where as the yen gained past 160 to the dollar overnight, following suspected reported intervention, the export-related names are coming under pressure. So that's the flip side of things. But also when it comes to the BOJ and how it left rates unchanged, this was the consensus. In the statement, there wasn't much as well in the way of surprises. So the focus now shifts to Ueda's presser. There's a lot of pressure for him to follow through on hawkish messaging to help support the Japanese currency, as you can see how it has paired gains in the Asia session. Abir?
All right, Avril, thank you as always for those updates. Avril Hong in Singapore. Now let's get more on this BOJ decision with Hiromi Ishihara, head of equity investment at Amundi, Japan. Hiromi, thank you for your time this morning. We were just talking about how timely it is for us to have you on with us this morning. A possible intervention, the BOJ decision earlier, and we're awaiting that presser that Avril was talking about. So simply to start with, what do you expect the messaging to be out of the presser?
So if whether actually could give us any indication of the next interest rate hike timing would be a key, because very interesting timing that we saw the FX intervention the last night. So it's certainly the pressure over the yen is getting higher. So September or October are sort of the consensus right now, but September meeting could be live meeting, then yen could be strengthened a little bit. So it's all the eyes on the indication for next hike.
Hiromi, I'm also taking a look at the levels the yen is sitting at right now at about 160.7 on the dollar. Now, it was stronger yesterday following that reported intervention. The consensus on further intervention, what is that for you? What does that look like? And would it be enough for the Japanese government to continue intervening, or are we ultimately going to need to be looking at higher rates?
So what the market is suggesting is definitely BOJ is the behind the curve right now, and they need to take action more quickly than right now. So the pressure is really high, but the government is also, adding the extra pressure of the BOJ. So even though we have seen like a 165, it could be another intervention level, but the yen itself structurally weak against dollars, so any intervention actually have the very short-term impact rather than structural impact.
And Hiromi, what would that mean for equities? Would that be a possible headwind or a healthy development for Japanese equities? And then what sectors do you see benefiting and which ones stand to lose from a possible hike?
So weak yen generally is positive for export-oriented, and as you could see, for example, the mega caps names in the topics or Nikkei 225 are mostly exposed to the export-oriented business, so they are the beneficiary for weak yen. However, what we are really concerned over here is the impact of the inflation and also the sustainability of JGBE level. So we are really in the level that we feel uncomfortable, to be honest, at the FX level right now.
And I'm just taking a look at the Nikkei, Hiromi, and it's rebounded sharply, especially when compared to what some moves we've been seeing in regional peers, including the Kospi. So do you think that despite, and this is also despite the ongoing volatility that we've seen in the yen, so do you think that foreign investors are still structurally bullish on Japanese equities, or is this easy money out of these governance reforms that we've been seeing?
So I think it's actually obviously that investors are bullish on Japan, and then I think it's overall the constructive view on Japan equity itself. Just looking at the index constituents, of course, Nikkei is exposed to AI-related names and has a sensitivity to all the semiconductor AI-related rally. However, looking at how the performance has been driven, we have a lot of broader universe, broader sector actually contributing to the positive performance in Nikkei, which means that the Japan equity actually can offer broader investment opportunity outside of AI. Of course, the AI is a big theme, but at the same time, that we have the corporate governance story, but also the positive macro environment, which should support the domestic-oriented side. So I think compared to U.S. equities or other Asian equities, Japan equity actually is an interesting diversifier, providing a different broader investment opportunity. So all in all, a constructive view remains.
All right, Hiromi, we're going to have to leave it there. Hiromi Ishihara, Head of Equity Investment at Amundi, Japan. Thank you for your time this morning. Now, from central bank decisions to geopolitics, our top story this morning, President Trump says his U.S.-led Board of Peace has reached a deal to disarm Hamas and other armed groups in Gaza and establish a new Palestinian government. Meanwhile, there was an unusual calm between the United States and Iran after re-escalation between the sides for the past 2 weeks. Joining us now to discuss all of this is Ian Parmeter, former Australian ambassador to Lebanon and research scholar at the Australian National University Centre for Arab and Islamic Studies. Ambassador, good to have you on this morning. Lots of developments, albeit a little bit of calmness between the United States and Iran. Given the latest escalations, I want to start with the Board of Peace in Gaza and the plans there. President Trump taking this as a win, essentially, before any details emerge. How likely is it, do you think, that we see both parties, Israel and Hamas, come to the table and actually agree to have Hamas disarm weapons?
I think with anything to do with Israel and Hamas, a degree of caution is warranted. There's zero trust between the two parties. The degree of hatred between them is really quite extraordinary. The other aspect is that President Trump has made major statements in the past that have indicated that he's actually been able to bring peace to Gaza, and they haven't quite worked out. As we have it at the moment, Israel occupies nearly 70% of Gaza and it would be most unlikely to start withdrawing from that unless it really did feel that Hamas was completely under control. Now, Hamas has been prepared to make this statement that it will give up its weapons and that also give up political control of Gaza, but the extent to which it will do it in full is very uncertain. You can give up some weapons, but not all of them. And the other aspect that I should mention, of course, is that Prime Minister Netanyahu is facing an election in 3 months' time, and he won't want to go into an election with his opponents being able to say that he's agreed to a deal which doesn't absolutely guarantee Israel's security.
Yeah, of course. And, that is something that is happening very soon. But ahead of all of this, let's just assume that they get through those disagreements. And there's a huge layer of complexity, as you've mentioned, with Hamas disarming and Israel agreeing to pulling out. But let's just theoretically assume the deal does go forward. They go through all these layers of approvals. And then we start seeing countries in the region get involved, the Gulf countries, Egypt, Turkey. Does that mean a new regional architecture, or is it just going to be continuously Israel and Hamas with third-party players?
I think the most important aspect would be the international stabilization force, which is referred to in President Trump's 20-point plan that he announced last year. And that includes Indonesia, among other countries. But we don't know at this stage anything about the contribution that they would make and just how exactly they would work. Gaza is not a large area, but it has a huge population. And the international stabilization force contributors would want to be quite clear that the danger to their troops who are going into Gaza would be minimal. So it's we don't have any indications of that at this stage as to just how that can be guaranteed. But we do have as well, though, a Palestinian Technocratic Committee, a 13-person technocratic committee that is prepared to run the administration of Gaza. And we also have an overall coordinator, the Romanian diplomat, Mr. Mladov. And so all of the technical aspects are in place. The technical and security aspects are in place. It's a question of just whether they can operate.
Just quickly on this is all happening in the midst of a wider war in the region, Iran and the United States. Why do you think President Trump made this announcement now? Do you think it's a win in the midst of all the losses that the U.S. is facing right now between itself and Iran?
Well, there's no doubt that President Trump is looking for wins at this point. The war against Iran is going very badly. President Trump keeps making optimistic statements, but the war is the most unpopular in American history. He's losing popularity himself as a result of it. So being able to announce a win in Gaza, first of all, it changes the conversation, but it does actually potentially give him something to be able to say that he has achieved in the Middle East.
All right, Ambassador, thank you so much for your time this morning. Ian Parmeter, former Australian ambassador to Lebanon and research scholar at the Australian National University Centre for Arab and Islamic Studies. Now, coming up, Saudi Arabia posts its deepest quarterly contraction since the pandemic. We'll have the details on those numbers next. This is Bloomberg. Shell is looking for alternative routes to offset the disruption in energy supply caused by the war in the Middle East. Speaking to Bloomberg TV, CEO Wael Sawan says the company remains confident. This is despite the disruption, especially in their business in Qatar. Take a listen.
Of course, we had some real challenges there. A missile hit one of our facilities. Thankfully, no one was hurt, and we are well on our way to repairing the damage that was incurred there. What I would say is at the moment we keep a very close eye on what's happening in the Straits because at the end of the day the facilities are offline pending our ability to evacuate product, as of course is the majority of the oil and gas resources that are needing to traverse the straits. And so no guesses on how long it's going to take, but suffice it to say, we continue to focus on, first and foremost, the safety of our people, and then finding alternative supplies to meet our customers' demands.
Well, is your willingness or enthusiasm for investment in the Middle East, is it being challenged at this point by what we've seen over the last 3 months?
The Middle East will always be a core region for energy. And when we look at any investments, we are, of course, always looking much, much longer term. So while, of course, the short-term disruptions are concerning and we need to be able to sort of grapple with what they mean at the right points in the cycle, longer term, we continue to have high confidence and look to continue to have a diversified portfolio of supplies. Of course, we saw the impact of us pulling out of Russia. If we had concentrated on one region or one country, it doesn't play to our model of being a global, diversified energy supplier and one that is able to optimize those supplies to meet our customers' demands. And therefore, I wouldn't rule it out or double down. I think at the moment, we continue to have that long-term view of fundamentals and will operate accordingly.
That was Wael Sawan, Shell CEO, speaking to Bloomberg yesterday. Saudi Arabia's economy has recorded its deepest quarterly contraction since the COVID-19 pandemic. The decline was driven by a sharp downturn in its critical oil industry as a result of the war in the Middle East. So to discuss all of this, we're now bringing in Chief Emerging Market Economist for Bloomberg Economics, Ziad Dawood. Ziad, about a 5% contraction in the GDP numbers that came out yesterday. What does it essentially say about the impact of the Iran war on the kingdom?
Well, it says a few things, but the headline is the impact is deep. Now, there's an aspect of it which is basically the oil sector, how much oil or barrels does Saudi Arabia produce, and there was no surprise there. There's a big contraction because of the shutdown of the Strait of Hormuz. But the Iran war is also filtering into the non-oil sectors, stuff like construction and tourism and all these sectors. There is weakness there. It's not as deep, nowhere near as deep as the contraction in oil, but there is weakness that is filtering through there. Now, what's going to happen going forward? If we get a gradual reopening of the Strait of Hormuz, you mentioned COVID, we'll get a V-shaped recovery, the stuff that we're talking about during COVID. That assumption, which we currently hold, is being challenged by the recent geopolitical events. We're seeing escalation between the US and Iran, we're seeing escalation between Saudi Arabia and the Houthis, and we're seeing an exchange of strikes from Saudi Arabia to Iraq and from Iraq to Saudi Arabia. Our underlying assumption is some gradual reopening, but obviously the geopolitics is challenging that.
That V-shaped recovery just gave me a little bit of PTSD about COVID times. But then about the general consensus or what we can extrapolate when it comes to regional economies out of Saudi Arabia as a story, Ziad, what can you tell us about how regional economies are going to suffer?
So the good thing about Saudi Arabia is that they publish data early and we can see what is happening there. And I think if we try to infer what's happening to the broader region from the Saudi numbers, it is basically that with the exception of Oman, Saudi Arabia might be faring better than the rest. So if you think the Saudi numbers are bad, they're going to be worse in other places. Let's break it down. Again, oil and non-oil. Despite the war, Saudi Arabia was still able to get a lot of its oil out during the war. Kuwait didn't benefit from this, Bahrain has not benefited from this, and Qatar has not benefited from this. Saudi also faced fewer attacks on its soil, which means that the non-oil sectors have been impacted less by Iran than in countries like Kuwait or the UAE. So with the exception of Oman, I think the Saudi numbers will probably be better than the rest of the region.
All right, Ziad, thank you as always for your analysis on the region. Chief Emerging Markets Economist for Bloomberg Economics, Ziad Dawood. Now coming up, a surge in illegal immigrants prompts Spain to order an emergency military deployment. We'll have more on that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. Egypt has unlocked around $1.8 billion in financing after clearing the seventh and cumulative review of its expanded IMF program. The IMF board said Egypt faced a fallout of the Middle East conflict in a strong macroeconomic position and made sufficient progress on selling state assets. Completion of the reviews immediately makes the $1.5 billion available to Egypt. The Spanish government has ordered troops to one of its two North African enclaves after a recent surge in illegal immigrants. Local media reporting thousands of illegal immigrants have crossed into Ceuta in recent days, one of the only land connections between Africa and Europe. Spain's defense minister says he is sending soldiers to help reinforce the border, plus boats and divers. And Ethiopian Airlines expects the pace of its revenue growth to reduce by half due to the Iran war's impact on oil prices. Africa's biggest carrier sees a 10% increase in sales this financial year. That is down from 20% growth in forecast. The airline CEO says operating costs increased by a quarter, mostly due to fuel, and expects expenses to rise further. Now, before we send you off to the weekend, a quick look at where equity benchmarks are sitting. Green across the screen. When it comes to U.S. futures, we're expecting a positive session later today, another positive session after yesterday's close in the green. So 0.5 higher for S&P futures, 1% higher for NASDAQ, 0.5% higher for Dow Jones, and European stocks also higher at the open is the expectation. Brent crude prices are in the red as escalations in the Middle East calm down slightly today. We're also seeing NY crude a little bit lower, 2% lower this morning. Now that is it for Horizons Middle East and Africa. Stay with us for Daybreak Europe. This is Bloomberg.